Hello and welcome back. Francois, hello.
Hello, Mark.
Thank you for joining us. I've titled this video Equity Buying Levels and the Financial Condition Index. I'd like to talk about those two things and then German stocks, gold, US dollar, and the luxury sector if we have time. First of all, coming to equity levels, we've reached your target in the S&P 500 now, 5,500. Are you happy that conditions are right for coming back into the market now?
Not really. I think that what we had in terms of development in the course of the last 10 days, despite the fact that we rebound from the level that you mentioned, the 5,500 on Friday, are not particularly good. They are not telling us that there is a buying opportunity or screaming buying opportunity right now. There are different elements. I think that at the end of the day, what happened in the market in the course of the last 2 weeks is a deterioration in the confidence among investors. It's quite clear. And for example, when you look at the Michigan Consumer Index on Friday, it was not particularly good. It was going down quite significantly. And what is interesting also is that inflation fears are rising. Moreover, the volatility, the VIX index, has settled up a little bit lower on Friday, but nevertheless, it's on an upward trend. And as you mentioned, financial condition index are not particularly good. And what is interesting is to look at the widening of the spread of the credit market versus the treasury bond. And this has widened quite significantly, both for investment grade and high yield. And this is not something that is telling me that the conditions are right to jump into the market right now, and that you need to be patient in terms of assessment of what is going to happen in the coming weeks.
What is the event you would wish for? Could it be political or otherwise that would reassure you to come back into the market fully?
I think that there is a lack of visibility when it comes to the policy of the Trump administration that is weighing on market sentiment. I think that it is very difficult, and we all know that by April the 2nd, the Trump administration is going to come with more tariffs and more elements on the front of the quote unquote trade war. I think that the reaction of Europe last week to the decision of Trump concerning steel and aluminum was quite strong. So I think that people need to have more visibility on that front. I think that also we have a week where we will have important numbers coming, because we will have today, I think, the retail sales in the US, the industrial production will come out. And those two elements are very important because they will tell us more about the development of the economic situation in the US. I think that what is also important is what is going to happen in Europe. We will have the vote by the German parliament this week about the spending program that was initiated by Mr. Merz, and the fact that the fiscal limit is going to be modified. So you still have a lot of things coming. And now there is also something that is looming for the medium term, which is Mr. Trump going to come out with a tax cut program? This is something that people are expecting, or is it impossible for the Trump administration to move forward with such a development?
Coming to the financial condition index, there's lots of these. Without going into the smaller nuts and bolts, which one do you follow? What is it, and why do you incorporate it into your decision-making process?
Because at the end of the day, financial condition index is an index that was built originally by central bankers, one of the big central bank, G7 central bank, and then it has been moving forward with some adaptations in major banks. You have, for example, the Bloomberg Financial Condition Index that you can follow on your Bloomberg screen, and is giving you a good sense of what is the kind of liquidity that you have in the market, and liquidity, especially in the financial sectors. As I mentioned, when you have a widening of spreads, when you have interest rates going up, when you have equities going down, those are elements that are taken into account and bringing the financial condition index down, which means that there is less liquidity in the system. So it means that potentially you have more tension into the financial and banking system, and you need to be careful with this index. And that's exactly what I'm looking. And that's the reason why lately I have been worried, because clearly the financial condition index is coming down quite a lot in terms of the last few weeks.
All right. Well, if the US has been going down, I think all the major indexes have reached correction territory of down 10%. The opposite is happening in Europe, especially in Germany. Germany's been gangbusters the last few weeks. What are your comments on German stocks and the announcement on Friday that possibly an agreement had been reached on the debt brake?
This is one of the major factors that is pushing the market higher. And the fact that at the end of the day, what is also very interesting in terms of this move concerning Europe versus US, we all know that since the last quarter of 2024, there is a rebound in European equity, German equity in particular. The cyclicality of the German stocks index is appreciated by investors. The fact that lately you had some earning revision coming from the European equities is something also that is supporting the European and the DAX index. And the notion that potentially the fiscal break is over means that you have more room for a kind of economic rebound in the major European economy, which is Germany. So it is those are all the elements that are supporting the run up in German stocks in the course of the last few months.
Would you say that European financial conditions are strong enough, especially the news in Germany, to overcome the overhang of possible Trump tariffs?
I wouldn't say so. I would say that, at the end of the day, the global economy at the end of the day is most of its financing needs are in US dollar, which is the reserve currency. So if something is happening in the financial condition index, which is spreading into the financial and banking system, which is not what I am saying. I'm just saying that there is some kind of warning sign. For the time being, you cannot say that the financial system or the banking system is infected. But if that is going to continue, I think that Europe financial conditions are not necessarily very relevant compared to what is happening in the US.